Historically, private markets, real economy assets, have been a closed shop reserved only for the largest institutions. We've partnered with digital capital markets platform Mesh to make our private placement of 2 commercial property transactions easier to access and easier to own. These private placements, available to qualified investors only, offer equity represented as tokens in 2 landmark projects: the Rijn Meent mixed-use precinct in central Stellenbosch and Dorpstraat Property Investments, a national convenience retail portfolio. Rijn Meent represents the next generation of property investment, a work, shop, play, stay ecosystem that balances high growth potential with defensive security. 70% of the office footprint is already pre-let for the regional headquarters of Investec, a blue-chip foundation of contractual income. Retail, anchored by checkers and clicks, focuses on daily needs, attracting foot traffic year-round. And a high-end apart hotel taps into short-term tourism, mid-term business travel and premium student demand. But our edge isn't grand vision, it's discipline. Pre-lets before shovels, capex staged to risk, governance that actually governs. The goal? Cash flows underwritten by anchors, optionality through diversification, and long-term compounding in a node that keeps proving its scarcity. Our second offering is Dorpstraat Property Investments, a curated portfolio serving the daily needs economy. The DPI thesis is simple. In property, bigger isn't always better. While massive regional malls face headwinds from shifting consumer behavior, the convenience center has emerged as the hero of retail. DPI comprises 17 convenience centers in affluent, high-growth nodes. These centers are the backbone of the daily needs economy, where people stop for milk, to pick up a prescription or grab a quick coffee. Unlike a single property investment, DPI has built-in diversification with 9 centers trading and 8 under construction, so the portfolio balances immediate cash flow with future capital growth. Smaller formats, faster reletting, lower capex drag, and management that has repeatedly unlocked value through brownfield redesign and targeted greenfield development. The goal? Steady net operating income and disciplined capital growth through a portfolio-level exit. These 2 investments are designed for qualified investors building an alternatives allocation with a minimum of 1 million rand per investor as principal. At 27.4, we select with a fundamentals first lens, credible sponsors, executable pipelines, conservative leverage, and hurdle rates that make sense. These aren't replacements for listed REITs, they're quality commercial property alternatives inside a serious portfolio, sharing core fundamentals with low correlation to the listed market. Fees and covenants are disclosed. Risks are clear. The focus is total return over the full hold. If you're seeking an alternatives allocation with compounding, governance, and diversification benefits, 27.4 offers 2 distinct ways to build smarter exposure via equity stakes in these iconic property investments. Sign up to read more on mesh.trade. Not a public offer. For qualified investors only. Private market and token investments carry risk. Returns and liquidity are not guaranteed. Review full investor documentation on mesh.trade and seek professional advice.